हेलो दोस्तों, नमस्कार and welcome to our channel on taxes, the tax bites. So the government should be congratulated as per the recent GST Council meeting, wherein they have reduced the taxes on various food items and other materials, and now the tax structure has been made simpler. Previously there were 3 or 4 tax rates, the 5%, 12%, 18 and 28. Now there will be only 3, the 5, 18 and the 40% for the singles. Now so far so good, it has been widely publicized by the government also in the media. Now but if we go into the final print of the minutes by the GST Council, there is another important change which will touch majority of the service providers in India, especially the MNCs one. That change pertains to the intermediary. Now the concept of intermediary, as you are aware, is not new to GST regime. It has been grandfathered from the service tax regime. Service tax के अंदर भी this has been seen that on various occasions the government or the tax authorities have earlier considered a transaction as the export of services, granted the refund, but somehow 5 years, 6 years down the line, they changed their mind and then demanded back the refund earlier granted, denying the export benefit by clubbing the transaction under the intermediary. And the double whammy was they asked the service tax on the export revenue as well. So, under when the GST was introduced in 2017, the same problems were faced by the service providers in India. And in the year 2022-2023, the government issued a detailed circular regarding the intermediary, wherein they have given a detailed clarification when a service provider will be treated as intermediary and when not. Now, the intense or the litigation started around the intermediary concept, whether the export benefit is there or not. And during the course of one of the litigations, the Delhi High Court has held that the concept of intermediary is not ultra-vires the law, but if the services of an intermediary does not tantamount to export of services, then that intermediary cannot charge CGST, SGST on its invoices, but has to charge IGST. So in a way that the concept of intermediary was not giving certainty to the tax environment in the mind of the foreign head offices who are wanting to establish an Indian branch or the marketing branch in India. So taking the representations by the various taxpayers in mind, the GST Council has recommended to remove the concept of intermediary altogether from the IGST Act. The GST Council has recommended to amend the section 13, subsection 8 of the IGST Act to remove the concept of intermediary so that the place of supply of such transactions will be determined in the residual rule, that is the location of the service recipients. Now so far so good, there are 2 or 3 questions which needs to be answered. Number 1, by when this provision would be applicable, whether from 22nd of September, as the Finance Minister said. The answer is no, because this will require an amendment in the IGST Act, and that amendment is possible only either in the winter session or the budget session. So if the government chooses the budget session to move such an amendment, then the most appropriate date could be the April 2026, by when the intermediary concept will be taken care of, or will be get rid from the IGST Act. The number 2 would be the impact on the intermediary who are operating in India. As I have just mentioned, the Delhi High Court in one of the judgments have mentioned that the intermediary should not charge CGST or SGST. But once the amendment took place or is in force, then the intermediary would be required to charge the appropriate tax based on their location and the place of supply. The second aspect to note over here is, suppose a foreign service provider a foreign company has appointed an intermediary which is also located outside India, and they source certain material from India, right? The Indian exporter exports the good to the foreign recipient at the behest of that intermediary. Now the question is whether that would be subjected to GST or not. Now in this case, if we see, both the service recipient and the service provider, the intermediary and the foreign party, are located outside India. They do not touch the boundary of India. Under whether this transaction could be clubbed or could be treated as a Schedule 3 transaction, the answer would be no again, because in Schedule 3, the transaction of the supply of goods when the goods doesn't touch India is clubbed over here, and hence that it needs to be seen how the government will clarify such a transaction. Now the third aspect which has to be seen is the impact on the trade as a whole. Now this transaction or this amendment would specifically benefit those foreign companies who have a marketing arm in India and are for the targeted customer in India. Now in this case, previously there was a sword hanging from the intermediary perspective. But after taking away or after removing the intermediary concept from the IGST Act, these companies can take the benefit of the export of services and then can have the refund of the input tax credit that they are paying on the procurement of goods or services. So friends, I think this is a very important step in the right direction at the right time to spur the economy, because the investment in India will spur the employment as well as the other opportunity for the public as a whole. So friends, I hope you will find the discussion interesting and useful. Thank you.